Welcome. In this video, did ZBCN coin make new 88th? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. Looking carefully at the chart, it is clear that the price has finally managed to break this red-colored resistance line, which it has been struggling with for a long time and has tested many times strongly to the upside. This breakout is not only a short-term technical development, but also a strong structural transformation that could herald a major change in the market structure. In particular, this resistance zone has served as a level where selling pressure intensified in many previous price moves, and the price was repeatedly reversed. Breaching such strong resistance levels on the upside usually indicates that the market has broken the psychological threshold, and investor perception has shifted in a positive direction. This red line was not only a visual line of resistance, but also a confidence line, a psychological barrier for investors. Failure of the price to cross this level has in the past led to profit realizations by investors, intensified selling, and a pause in the uptrend. Now, however, the situation seems to have changed completely. The price broke through this important technical level, which had not been breached before, this time with strong volume support, and opened a new page. The upward movement after this breakout is a major reassurance not only in technical terms, but also in terms of investor psychology. In addition, the fact that this price reached a new, unprecedented high, the all-time high after this breakout, shows how strong and meaningful this move was. The ATH usually represents the moment when market participants' optimism peaks and new investors start to enter the market. The persistence of the price above this red line and the subsequent new highs show that the market is completely under buyer control. The bulls are now in control, and the trend can move much higher. New highs are a very important signal in technical analysis because the price has stepped into a level that it has never traded at in the past. This means that there is no longer any serious resistance in front of the price. In other words, the levels where selling pressure was encountered in the past have been left behind, and the price has entered completely uncharted territory. Such rallies usually boost the confidence of market participants, and both short-term traders and long-term investors tend to increase their positions. This is an important sign that the uptrend may be longer lasting and stronger. The reaction of the price after crossing the red line also indicates a very healthy bullish structure. In other words, the price not only broke the line, but also maintained above this level and continued its upward momentum. This behavior confirms that the breakout was not a fake breakout, but rather a technically strong, bullish pattern. In such cases, the price is usually able to test the broken resistance level as a support later on, which shows how healthy the price structure is. With the appearance of new 88ths, the market structure has changed significantly. Traders are now focusing on higher price targets, potentially Fibonacci expansion levels, psychological resistances, or fundamental analysis-driven targets. Such breakouts are not only a resistance crossover from a technical analysis perspective, but also a very important signal that the trend is maturing and gaining strength. Moreover, the impact of this breakout can be even more lasting and powerful if it is supported not only by technical factors, but also by increased news flow, positive market sentiment, and macroeconomic developments. But we can't decide the analysis with ATH alone. Let's look at other metrics. Stay tuned. One of the most notable structures in the chart is the formation of a cup and handle pattern, which stands out among classic technical analysis formations due to its reliability and high success rate. This pattern has long been recognized by investors and traders as a strong bullish signal. Its formation indicates that price movements are preparing for an upward trend in a steady and systematic manner. Especially when it forms on larger time frames, the cup and handle structure is often seen as a precursor to a long-term and strong upward movement. Initially, the cup part of the pattern is formed. This section begins with a pullback from a certain peak level and is completed when the price finds support and then climbs back to the same peak level. This structure shows that a correction occurred in the market, followed by a strong recovery. One key detail to pay attention to here is the depth and symmetry of the cup. The fact that the price reaches the same level after the pullback and forms a balanced, rounded base strengthens the validity of the pattern. This setup indicates that buyers have regained control in the market and that the price is regaining momentum, a very healthy formation. After the cup part is completed, the price undergoes a period of sideways movement or a slight pullback, forming the handle portion. This handle typically appears as a short-term consolidation or a mild correction. This area is where investors take profits or where temporary indecision in the market causes prices to move sideways. However, this structure is actually a positive resting phase. Since there was a strong upward movement during the cup phase, a brief pause to regain strength is natural. From this perspective, the handle can be seen as an energy-gathering phase for the next upward movement. During the formation of the handle, trading volume typically decreases. This is a sign that the pattern is developing healthily. A pullback with low volume does not indicate market weakness. On the contrary, it suggests strength is being accumulated and that the market is preparing for a new upward move. During this process, the market enters a tightening range, and when a breakout to the upside occurs, the cup and handle formation is considered complete. This breakout is the most critical and defining stage of the pattern. If the price breaks above the upper resistance of the handle area, it is a technical confirmation that the uptrend has begun and that a strong wave of buying may follow. To determine the target level of the pattern, the classical method is to measure the depth of the cup. The depth is calculated as the difference between the peak and the trough of the cup, and this distance is added upward from the breakout point to determine the pattern's target. For example, if the cup's lowest level is 100 units and the peak is 150 units, the 50-unit difference is added above the breakout point, resulting in a technical target of 200 units. This provides investors with a concrete idea of how far the price may rise once the formation is complete. When examining the current price structure, both the cup and handle parts appear to have formed in a symmetrical and orderly manner. This further strengthens the technical validity of the pattern. Especially if an upward breakout has occurred after the tightening in the handle area, this suggests that buyers have gained strength and that the price has the potential to climb to higher levels. In technical analysis, such formations are often considered safe zones for buying, as they reflect both past price behavior and potential future movements. One of the most important technical developments on the chart is that the long-standing falling trend line on the relative strength index has finally been broken to the upside. RSI is an extremely important oscillator used by traders to analyze market momentum and possible turning points. In particular, RSI's trend breakouts are often a harbinger of big moves on the price charts, especially when they provide leading signals of price movements. In the case analyzed here, the RSI has been moving in a downward trend for some time. This downtrend line was characterized by the RSI peaking lower each time it made a top, and over time, it became a strong resistance. This kind of downtrend indicated that the momentum in the market was weak and the strength of buyers was waning. However, we are now witnessing a change in this pattern. The RSI broke to the upside with strong momentum after approaching this falling trend line once again. This breakout makes it clear that investors are now showing more buying appetite and the market is about to enter a new bullish phase. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.